Welcome to Master Trader, where you can learn to use simple market and stock analysis to make money investing and trading. I'm Greg Capra. Today I'm going to discuss with you the problems the majority of traders have profiting from the markets. The main reason is that this industry is flooded with those that want to tell you that you need to use various indicators to interpret price action and how to enter a stock and how to exit a stock. Nothing could be further from the truth. This is the main reason the majority cannot make money in the markets. So let's take a look at a few charts with only a few indicators that probably some of you are using right now. So let's start with the transportation index. We could pick anything to look at. So as we look at these charts, you'll see these are just different ways that you might come across of how you are being told to interpret price action. These are what I'd say the more simple types of indicators that are out there. There are much more esoteric, but what we have here is what's called a MACD or a MACD indicator, which looks at the difference of two exponential moving averages and then plots this histogram, which is a measure between those two lines. And this is supposed to give you buy and sell signals based on the crosses or whether it's above the zero line or below the zero line. So you have to interpret that in of itself, above or below the zero line. Is it crossing from below the zero line or above the zero line? This histogram, is it moving down? Is it moving up? So there's a lot of different things to interpret. Now, in addition to that, you have the question as to what parameters should you be using? Because the default is 12 and 26, exponential. Well, isn't exponential the right ones? They're supposed to be faster moving averages. Some will tell you that they have proprietary settings that are going to optimize this MACD indicator. And of course, that sounds enticing as to ensuring that you're going to make money. And this is part of what drags in most into believing the indicator methodology, is that there's some proprietary indicators or settings that are going to ensure that you make money. Many will include another indicator, and there are hundreds of them. And when you think about the different settings, there are tens of thousands of indicator combinations with various settings, which leads to the question, are any of them right? Where does it end, if any of them actually worked? So you can change the settings on with the bottom one that's called the stochastic indicator or oscillator. And some methods or systems would use a combination of indicators, maybe these two, maybe four others, maybe even with moving averages, which we have on this chart here. So it continues to lead the question, is overbought really overbought? Why doesn't oscillators become oversold and then turn up again? Do you need to change the settings? Are these the right combinations? The questions are endless and, of course, result in confusion. Let's take a look at another. This is what we're getting into really of the Holy Grail type of indicator, this Chikumi cloud. If I'm not destroying the name in my pronunciation, I apologize for that. But in any event, it is supposed to do everything as to determining support, resistance, trend, turning points. So you've got a combination or hodgepodge of different things which produce a cloud. So it's called a positive cloud and a negative cloud, and different trends that are happening and where it's supposed to pull back to, that is supposed to provide you with the proper entry points and buy and sell signals. Are you confused? You should be, because this is just a mess where you have so much even on top of the prices that sometimes you have to turn your head sideways to figure out where the prices are between all of the squiggly lines that are going on here. Let's take a look at another. So here we have a combination of different moving averages: simple, exponential, shorter, intermediate term, long term, different long term ones, trend line breaks that are totally meaningless. So you had a break above the line and it drops back down, and then a break above the line and it breaks back down, and a break below the line and it breaks back up. Oh, this one worked. Oh, this one started to work, and then it came back down again. All of this is what's stopping you from understanding what is the truth in technical analysis, and that is price. You do not need trend lines. You do not need different indicators like stochastics and MACD and RSIs and ultimate indicators, and the list goes on and on and on. And you can spend years trying to figure this out and trying to figure out which one is right, because the marketing for all of these different indicators, of course, sounds good because they're showing you examples of how it worked at the time. But all you have to do is change the symbol, and everything begins to change. The position of the lines, change the time frame, everything begins to change. If we go and then do an intraday time frame like a 60-minute chart, now the lines are pointing up. How are you supposed to make sense out of all of this? The first step is just remove all of this hocus pocus off of your chart and start paying attention to the truth in technical analysis. Right? Now, I can show you how to use some simple moving averages to speed up the analysis. However, you can do this with what I would call a naked chart. Nothing on it whatsoever. And what you do as a master trader is understand price action. For example, in this stock shack, we bought it in the master trader green room on a breakout above this area. Why? Because notice it was going sideways. After a gap up, which it then went sideways, and buyers continued to step up. Think about if you saw this stock moving up as high as it did. The majority would say, well, it should pull back. Well, it didn't pull back. And one of the clues here that we had was that it gapped down on this day and rallied. And that was a sizable gap that took out support, and then it rallied and went sideways. So we were ready for this to move higher, and it did. We did hold through this pullback, and then we sold it on this day as it started to break lower on an intraday time frame, and we had a great profit in it. Point being here, you can learn to read price action by itself. Keep it simple. You do not need all of these indicators. You can learn how to profit in the markets with some simple information, how to interpret price action, how to look at multiple time frames. Yes, we can add volume to that and put together a simple, systematic method of interpretation without all of the squiggly lines that'll confuse you. With that being said, visit mastertrader.com. Take a look at our free chart of the week. You might want to take a look at the beginning course that teaches you about the markets. I'll put a link at the bottom of this video that you could link to it. You can get started there, learn about some simple technical analysis, how the markets operate, some simple options, information on how to interpret them, and I'm sure you'll enjoy that. And then join us at Master Trader. Great trading, everyone.